Hey guys, welcome back. Today we have another great SPAC stock for you with a lot of upside potential that you may want to buy soon. Of course, remember this is a SPAC stock, so it is considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. So yesterday, there was another huge SPAC deal announced. Online lending startup SOFI, or Social Finance Incorporated, will go public via a merger with Shamat Social Capital Hedosophia Holding Corp. The deal immediately sent the share price higher from $12 to $22. SOFI has been anticipating going public via IPO, but now has decided to go to a SPAC route with IPOE. This is Shamat's third successful SPAC deal, first with Virgin Galactic, then Open Door, and now SOFI. Both Virgin and Open Door stocks have been performing very well and trading way above their SPAC's original IPO price. And so people are so excited about the same thing for SOFI. This is exactly why we always said in our SPAC videos, stick with SPACs with good reputable sponsors. If you haven't watched it yet, please see our video above about 2 SPACs that are still in cheap with great sponsors. And as you recall, we usually don't buy SPAC stocks after it has made a deal announcement. We usually sell because the price has gone up and the hedge fund strategy is to sell on deal announcement. However, since SOFI is such an interesting and very popular company, it could still be a good buy at the right price. Now let's take a look at SOFI to see if it is a good business. Founded in 2011, SOFI is a next-generation finance platform. It started as a solution to offer students more affordable options to fund their education using social lending such as peer-to-peer lending, incorporating alumni to fund current students. Today, the company has moved away from an alumni-funded model to a non-traditional underwriting approach focused on lending to financially responsible individuals. It now offers a full suite of products including mortgages, mortgage refinancing, personal loans, cash management, and investing. SOFI uses an underwriting model that examines free cash flow, professional history, and education in addition to a history of responsible bill payment to evaluate its borrowers. SOFI's mission is to help its member achieve financial independence through knowledge and great financial products. For example, in addition to having better rates than its competitors, its members also have full access to a full resource of financial education tutorial advisors and other reward programs. SOFI's business proposition is to offer you an all-in-one app with a full suite of products that are fast, convenient, and enriched with value-added content. They know that by locking you into their ecosystem, they will be able to cross-sell you on more products, which lowers their customer acquisition costs and raises the long-term value of each customer. Hence, they have been continually building many programs and products to keep their customers engaged and active on their platform. The market opportunity for SOFI is huge. There are over 500 million plus accounts across 4,700 banks that's available to switch to SOFI's platform. People often have multiple bank accounts because they find that one bank is not adequate for all their needs. For example, I have a regular bank, but I use Robinhood or TD Ameritrade for stock trading and my credit union for loans, etc. If SOFI can truly offer a superior product all in one place, then of course I would also switch and add a SOFI account. Additionally, SOFI is also working on getting a bank charter, so they will soon be able to offer full banking services. In looking at SOFI's business performance, we see that they have been doing very well. For 2020, they expect to have over $621 million in revenue, which is a growth of 38% year over year. However, they expect to lose about $66 million. But for 2021, they expect to grow by 58% with revenues of $980 million and expect to make $27 million EBITDA profits. SOFI, as of December, had 1.71 million members, which is a growth of 75% year over year. It also expects to grow another 75% in 2021 and expects to exceed 3 million customers. The good thing about their business is that it's very scalable, and if executed perfectly, they should be able to grow and maintain a strong ecosystem of lifetime customers. Thus, I expect the company could be very successful with high growth and profits. As for valuation, the deal values SOFI at $8.6 billion. This put its valuation at 21.3 times 2024 EV to EBITDA ratios. I don't like the fact that the valuation is based on 2024 estimates. I know firsthand estimates and expectations are just that, estimates. It is a long ways away, and who knows what will happen from now to then. Thus, it is hard to say it is a fair value. However, given that, assuming they do execute perfectly, they're also expecting sales growth on average of about 40%. then a multiple of 21.3 times with a growth of 40% is a pretty good value. In looking at the technical charts, we see that IPOE has strong resistance at $22. It is now trading at roughly $20. There will be some excited buyers looking to jump in, which will push the price higher. However, we know that the hedge fund strategy is to sell on deal announcement. Thus, I anticipate that there will be some selling pressure. So let's wait a few weeks and for another opportunity to buy in the dip. A good price point will be at the support of $14. I don't think it will go any lower, but if it does, we will buy more. I've seen this happen with Shamat's previous open door SPAC, where it eventually dropped back to 15 before moving a lot higher as the deal got closer. This deal is expected to close in Q1, so likely around March. Thus we have time, and so let's wait until we can get in at a better price to lower our risk. That's all for today. Happy trading, and please don't forget to hit the subscribe button.